What happens after the coronavirus pandemic?
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome back, and thank you for joining us. What will happen after the coronavirus crisis? We're going to look at our current production, where our growth in loan volume is originating, and also potential future outcomes. But first, sheltering in place took on an entirely new meaning, at least for HECM lenders, that in the first week of the coronavirus pandemic. Not only did their employees and originators shelter in place at home, but many lenders themselves hunkered down by slowing their loan production as loan profitability collapsed in the secondary markets. High-tech lending CEO Don Curry reflected on the early days of the pandemic in his most recent interview with Reverse Mortgage Daily. We as a company hunkered down, retreated when it came to March's precipitous drop in profitability. I think that we took a step back and waited for the market to come back. It was a bit of a crisis in that a lot of the seniors were not able to get the profitability that we needed so we could cover their closing costs. So in most cases, we did wait for the market to rebound, and then as soon as it did rebound, we really took advantage of it. As mentioned on the show last week, much of the rebound in HECM origination volume we're seeing is coming from the boom in the refinances of home equity conversion mortgages. And that's not surprising considering today's abnormally low interest rates. In October of 2019, only 8% of new HECM FHA case numbers came from refinances. Fast forward to June of this year, and that percentage jumps to nearly 1/3 of all applications received. So, what can we expect after the coronavirus or COVID-19 crisis is behind us? Our first indicator could be found in the proverbial eye of the storm that lies between the control the virus's spread, hopefully soon, and the anticipated long-term economic fallout in the decade that follows. But today we're going to examine three possible outcomes. But before we do that, I want to take a moment and recognize the sponsor of this show, Fairway Independent Mortgage. Now you can click on the banner above this video and learn more how Fairway's business model encourages the entrepreneur, whether you be an originator or a broker. You may be able to defer your mortgage payments, but local municipalities, they may not be able to bail you out of your property taxes. That is the reality that many seniors will be facing as the fiscal axe is likely to fall on local property tax deferral programs. Local governments are facing massive deficits, that in the wake of the pandemic's business shutdown, and that starved them of millions of dollars in sales taxes, licensing fees, and also hotel occupancy taxes. As a result, many social programs, especially those for seniors, could be eliminated, and that does include property tax deferrals. State programs face a similar plight. In 2018, CNBC reported, at that time 24 states were offering some form of a property tax deferral for the senior homeowner. And this speaks to the widespread dependence upon such programs and many seniors who could find themselves at a place of risk. Now, consequently, we could see a renewed appetite for the reverse mortgage, especially among the lower income homeowner that would result. Now, let's look at the first world economies and how they may react to the pandemic's repercussions. And to do that, we need to look no back further than the 1970s. Can you believe that? Those of you watching over the age of 50 can remember the ugly consequences of stagflation. Now, that's an economy with an increase in inflation and a stagnant economic output, or GDP. So think of it as a recession coupled with an increase in inflation. Now, many economists trace the 1970s economic malaise and problems to several factors. Some of those include Nixon's untethering of the U.S. dollar from the gold standard, the breaking up of the Bretton Woods Agreement of currency exchanges with the U.S. dollar, and the introduction of price and wage controls. But don't forget, we also had the oil crisis, and most notably, the Federal Reserve's increase of interest rates in 1977 and their effort to slow inflation. Now, during that same decade, the 1970s, the median home price actually increased modestly, but monetary policies slowed the home buying and short-term appreciation because the average 30-year fixed-rate mortgage at that time began at 7.5% and climbed to 13% by the end of the 70s. But before you pick up the phone and call a crisis hotline, keep this in mind. While history is instructive, our national economy is much more complex and globalized than it was 40 years ago. Either way, ideal reverse mortgage lending opportunities can be found in the age of economic stimulus. That's right now, perhaps more so than afterwards. And lastly, let's look at technology efficiencies. In late April, we shared 5 ways that you can leverage technology for remote sales. But we're not the only ones. Several lenders in our industry today are using Zoom as somewhat of a virtual kitchen table so they can meet with the older homeowner who is avoiding contact with anyone outside their immediate household. And another technology advantage is what we call email services, or video email services, such as Loom. And Loom engages the recipient with a short video preview and then a recorded video that's linked to it, a screencast. That tool is helping several of our clients increase their closing ratios significantly, moreover just sending a complicated and boring PDF file. But technology has also streamlined how our loans are being processed with the online ordering of desktop appraisals and the ability for lenders to electronically submit HECM endorsements using HUD's Catalyst portal. Now, knowing what the future may hold is one thing, but seizing upon the present opportunities presented is quite another. So what are your predictions for what the post-COVID world may look like and what it may hold for us? You can leave your thoughts in the comment section below. You can also share this video with other reverse mortgage professionals using the links found on this page. And don't forget, every Monday, that's today, our latest podcast episode is published and you can listen to it here on HECM World or on iTunes if you'd wish. Thanks again for watching, and be sure to return next week for more reverse mortgage news, commentary, and analysis here at HECM World. Have a great week.